If you have been following me, you know I have been saying that the market will be fine even when we were deep in lockdown mode. And my confidence came from three main observations. Number one, our immigration minister has made numerous remarks that immigration is key to our economic recovery, and applications are still being processed. So the immigration numbers will start to recover and resume to the normal level once the travel restrictions are lifted. Number two, the 3 million job losses mainly affected people who were not ready to buy real estate anyway. Number three, real estate prices increased significantly after the United States did massive money printing to save the economy from the 2009 financial crisis. People wanted to hold on to tangible assets instead of cash because cash depreciates with massive money printing. For the coronavirus this time, the whole world is keep printing money. You see, the July market report from the Toronto Real Estate Board is confirming these observations. In the June report, we saw that the number of sales almost caught up to the same level last year. Historically, July was a quieter month because people would be away for summer vacations. This year, people couldn't travel, and guess what happened? July sales went up 49.5% from June. And that is a 29.5% increase over July 2019. The average selling price was up 16.9% from July 2019. Overall, it is an incredibly strong market report. It actually went way past recovery to a significant growth. If we dig deeper into the report, it actually answers three predictions that were commonly made throughout the past few months. If you are watching my video for the first time, make sure you click subscribe and hit the bell now so you won't miss future market updates like this. Now, let's get to the three most popular predictions that I have heard. Prediction number one, people would give up on the expensive city and move to the suburbs. Some people think that the work from home trend would continue even after the pandemic, so people would move away from the city and live in the suburbs to save costs. By city, I mean the city of Toronto, the 416 area, and by suburbs, I mean the 905 areas, which includes popular suburbs such as Mississauga, Vaughan, Richmond Hill, Markham, and so on. In the city of Toronto, you need to pay double the land transfer tax, and property prices are generally 30 to 50% more expensive than the suburbs. So if the prediction about people giving up on the city is correct, then we should see a decrease in the number of sales. Instead, we saw a big 15% increase in the number of sales in the city of Toronto in July compared to July last year. I think that's a shockingly big increase, given that we are not even done with our reopening process. And the number is telling us that people are obviously still confident about the city and are not moving away from it. We did see an even bigger increase in the 905 area, a huge 37% increase compared to July last year. If we look back into pre-COVID months like in February, the growth in the 905 area was also 20% more than in the 416 area. Probably because the 905 area is so much bigger and the price point is significantly lower. So I would say that it is just a consistent trend that the growth in the 905 is bigger than the 416. And it is not because more people are moving away from the city because of COVID. Overall, we saw incredibly strong sales numbers in both the 416 and 905 areas. Prediction number 2. Job losses and mortgage deferrals would eventually crash the market. I have been telling you that prices have been very stable even when we were deep in the lockdown. But many people have been saying that we won't see the effect of job losses and mortgage deferrals until the summer. Now that we have gone through the worst of COVID and we are well into the summer, we haven't seen any price drop. Instead, we saw an overall average selling price increase of 16.9% in July compared to the same month last year. The average price of detached homes increased 25.5% in the city of Toronto and 14% in the suburbs. The higher price growth in the city of Toronto further confirms that people are not planning to give up living in the city. Overall, the price growth supports my observations that the job losses are mainly affecting people who were not ready to buy real estate anyway. And it really doesn't look there will be a significant number of power of sales due to mortgage defaults. The mortgage deferrals could be applied due to uncertainty and not necessity. Prediction number 3. Condo market would hit the hardest because there is too much supply. Indeed, the condo market has been much more challenging than the low-rise market because of the much more congested environment. Many showing restrictions have been put in place, and in fact, many condo buildings downtown simply do not allow any showing at all. Many people also predict that downtown would be losing its value because of the work from home trend. Even with all the challenges in place, the number of condo sales in the city of Toronto increased 4.7% and the average price increased 8.8% in July compared to the same month last year. Again, the numbers are telling us that people are still very confident about city living. So, supply is actually tight as we discussed in the new condo sales video a couple weeks ago. If you haven't watched that video, I will put a link to it at the end and in the description below. I would say this July report just confirms a lot of things that we have been discussing over the past few months. So, if you want to take action now and hold on to a tangible asset instead of cash, you can schedule a call with me at the link below. Make sure you subscribe to stay on top of the market.